Hello, everyone. Greetings. Welcome to this week's Roundtable Live. Yay! My name is Laura Catton. I'm with the Wealth Press editorial team. My colleague Francisco is manning the chat. Say hi, Francisco. Let us all know you're alive and here.
Hey.
And the technical aspect, thank God. Good to see you, man. We got a lot of talk. We have a lot to talk about today. Of course, we have Roger Scott. We have Jeff Zaneri. I'm always going to slaughter
landing.
that.
You had a little bit of turbulence there, but you got it landed.
And Lancey Polito. So this morning, the St. Louis Fed chief, he doesn't think we're in a recession. Rate hikes should tame high inflation. Do you guys agree? We'll just do a quick thing about this. Do you think we're avoiding a recession? I want to start with you, Jeff. What do you think?
We're in a recession. I mean, we're not in like a classic, like deep recession, but we went from a totally fabricated, stimulated economy where everybody got stimmy checks to stay home and play Wordle. And now that money's ran out. People are waking up to reality. Kids need new clothes for school. They need new computers. The check's not coming from Uncle Sam. So yeah, we're in a recession. You're hearing it from all over. It's not a deep recession, but it's a fluid situation. If you notice though, the market got ahead of itself last week with the strongest July in a long ass time. And we've all been saying this. And the Fed guys have all been, every Fed governor is giving speeches all day, every day, talking up rates. If you've noticed, we had the 2-year interest rate pop like 40 basis points. We had the same thing happen in the 10-year. They got upset that the market was pricing in rate cuts in 2023, a little presumptuously. They need those rates to stay high to tame inflation, because inflation is just sitting there. It's simmering. It's not boiling, but you know when you're simmering, you can get back to a boil pretty fast.
Roger, what's your opinion?
Well, I got to say that my analysis, the way I gave this, and I'm very much in line with what Jeff just said, especially right now. The way I looked at it was there was 3 doors. About a month and a half, 2 months ago, there was 3 doors. Door number 1 was we're already in a recession. It's a mild recession. We're about 60, 65, 70% done. We're going to get out of this, and a real big recession is too far away to care about. Door number 2 was doom and gloom. We're only about halfway done. We're going to crash. It's going to be 2008 all over again. You know, all that bad stuff. And then door number 3 is a recession is just too far away. A real recession is too far away to really care about right now. The more I look at it, it's looking more like door number 1. I think we are in a recession. I think it's a mild recession. I think we've been in a recession for several months now. But I think what's happening is, and most economists, most financial guys, they're used to things kind of like putting a puzzle together. All the pieces fall. And in this environment, we have a very different trigger. This was COVID based. This is not a financial base. So you have things like spending is still there, whereas inflation is going up. It's kind of like what Jeff said. It's a very fluid situation, and you can't put a round. What's that saying? You can't put a square in a peg or something like that.
Square peg in a round hole.
I think that's what everybody's trying to do right now, and it's just not going to work because we've never been in this kind of an environment before. But I think that right now, in the next 30 to 60 days, we're going to have a much better understanding of where we really are. But for the time being, I think tech and all of these stocks have gone a little too much too fast, and I think they're going to revert back to where the volume is going.
What do you think about that, Lance?
We're in a recession. Came out last week. They lied about what is a definition of the recession. I mean, why else would they come out with all that? I think the market knows we're in a recession. That's why it's going up, because it's already implied that we're in a recession without them actually saying that. And it has been the best July I've had trading in a while. I mean, this is the most trending bullish market, and all the bears are getting squeezed their butts out, and it is just fantastic. If you are not making money right now trading, God help you. I got nothing. Yeah, I mean, you can't make money in this market the past 4 weeks, then maybe go on a vacation and come back and reevaluate, because man, I
It
mean,
was
this
just
is
what we needed, though,
amazing.
to get the action
Yeah.
going. It was just what we needed. We needed that. And we were talking about it last month, too. We were talking about, like, can't short this deep in the hole. We're going to get a snapback. We were talking about these ARK stock. I hate ARK. I hate Cathie, what she does. I don't hate her as a person. She seems like a fine woman. But her fund is a cancer on the market. But even that, I'm looking at some of these underlying stocks and saying, you got to start fishing in some of these names because they're so smashed. Look at PayPal. PayPal was a $60 stock for being a $300 stock. Okay. Now it's back to 100. I mean,
ARK's up 35% off the lows already. Like,
Yep.
I've been putting so much money. I've been getting lucky. This is not trading, more investments, but I've been bottom fishing in Netflix, PayPal, Robinhood, Ford, all these, names that got beat down. And you, like Jeff said, you can't shorten the hole. I tried shorting Under Armour, stock's flat, or now it's up 13 cents, and horrible earnings, but the stock's up 1.5%. You can't buy puts because the names are already down so much. So if there's anything decent, I mean, look at travel stocks, look at cruise liners, look at retailers. I mean, you're having 10, 15% moves in a day or two. It's phenomenal.
What about the meme stock, AMTD Digital? That stock dropped 126% yesterday. So we're seeing these bizarro outliners up 21,000% since its IPO 2 weeks ago. Talk to me about that.
It's normal. This is normal trading. Revlon doubled in a day or two.
they don't have options, which makes us pissed off.
Yeah.
I mean, that was the first time when I woke up yesterday.
So going back, so the Cathie Wood stocks are high growth, high multiple companies. Some never sold a vehicle or product before. They all move together, right? Is AMC a good stock? Is Nikola a good stock and they never delivered anything? I don't know. I mean, probably not if you look at, the fundamentals and want to go into that. But when they move, and these stocks have fallen so much, some 80, 90% off their highs, they move so drastically, so quickly. Like Robinhood cut its staff yesterday. Stock was down 2% after hours. Today it's up 14%. Is it because earnings were good? No, it's because it's part of that meme stock, short squeeze category. And when they move so aggressively to the upside. So the shorts have to cover. And implied volatility rises, especially if you're trading options, it's good, that it's so fast and aggressive that usually when this stuff happens, you start seeing, obviously the market squeezing today too, the NASDAQ, but usually when this happens, you start having that big pullback following suit because all the retail fish and all the players, the mainstream jump back in. And when everyone jumps back in something, the rug gets pulled.
Yeah, that's the Muppet money right now, which is the beauty of it, which is why it's great for trading. I don't care who's making stocks move in light summer trading as long as they move. But if you're looking at a more like long-term based bottom, it's not going to come from the Reddit crowd. So we're being led, like Lance said, by this greed, these short squeezes they pile on. A new boat of Muppets comes and lands on Greed Island, and then another nuke hits them and wipes them out like the dinosaurs, and then we rinse and repeat. It's Darwin, it's nature healing. It's the whole cycle. I love it. I'm sorry. It gets me excited because I know what's coming next, and it just creates more and more opportunity.
Now, I'm sharing my screen right now. I wanted to show you guys something. These are the pullbacks from different periods of our economy during different crashes. And the question now is this just a bear market, pullback, or is this a recovery? So I wanted to kind of show you. I did this little study yesterday. I thought this would be kind of cool to share with everyone. So this is from 2000 to 2002. Here you have 2007 to 2009. And here we are right now. And the question is, are we bottoming or are we going to go up? But you guys could see that these type of moves, these counter trend moves, are not that atypical in a downtrend. I mean, look at this, 18%, 24%. So the question, I think the question a lot of investors and traders are curious right now is, are we bottoming out, or is this just a leg up counter to the main trend? What do you guys think about that? I know that a lot of people are thinking about that, so I wanted to kind of put this picture up here and kind of get your guys' sense of thought. What do you think, Jeff?
Yeah, this is perfect. This is textbook bear market rally in the middle of the summer on low volume, led by the dog shit. I mean, this like
Yeah.
if you were reading a book about trading and you got to paragraph 3, I don't, I can barely read at this point. I just stare at blinking numbers. But if you were to read a book, it would probably tell you bear market rally and then just list what I said: leadership from the worst in the lowest, lightest volume period of the year. I'm a little bit nervous. I'm a little bit cautious because August historically is a pretty bearish month. September is historically the most bearish month. And October has the largest crashes in it historically, 1-day crashes. So I think August starts to get a little choppy, setting up for another bit of a bearish fall. And then we'll see how they end the year. But that's how I'm playing it. But like Lance said, when you get really like sucked in to thinking too deeply about the recession, you miss a lot of awesome moves. Like, do I really care if GDP shrank 1.1% for me to go long a movie theater chain, which was $35 and is now trading, what is it now? I don't know. I haven't looked at it today. 18. It was 13 a few days ago. No, I know that the Muppets are in there. They're moving that bad boy. And there's stuff to do. There's stuff all over the place. I mean, like you get moves like Lockheed Martin. We were supposed to have a war with China. World War III was supposed to start. I had a burn notice short in Lockheed Martin last night. I had a short that paid, printed 40% on options overnight in this market just because it got too stretched. So for people like me that are a bit contrarian and like trading in extended types of moves, this is pretty great. Like Lance said, this is the best trading summer in a long time.
Yeah, you have to. I mean, this is if you're a trader and you're trading, especially short term. I mean,
I think a lot of investors are going to make mistakes are making mistakes this summer, like getting too much of their cash back into the market. The long-term people, you got to still keep some cash for the fall. I guess if I was an investor, I would say that.
And I agree with that as well. Just a few days ago when we started, I think it was the 29th of last month, I was looking at stocks that were making one of the things that I look at when stocks get out of whack, Laura, is I look at stocks that are making 20-day highs and compare them to the number of stocks making 20-day lows. And the number on the 29th, I think it was on the 29th, it was like 550 stocks were making 20-day highs and 24 were making 20-day lows. And usually when you get things that out of whack, it usually means the markets are gonna. You know what? Let me show you this. You can actually see it. It's pretty cool if I show it to you. So let me just kind of show this to you. It's actually much easier to go through it if I show it to you. Oops. All right, here we go. Oh God. Different browsers, different problems. 1 second. Let me get this thing going. Here we go. All right. Easier this way. All right. So if you take a look at this, you will see right here 20-day breakouts and 20-day breakdowns. And you can see right now you have 240 stocks making 20-day highs and 30 stocks making 20-day lows. So this is today's data. So we have a time back machine here. So let's go back 1 day. Let's see here. That number yesterday was 240. Let's go back 1 day. 118. Let's go back another day. Let's go back another day. 29th. 547 to 25. So that's usually when things get out of whack like that, like when the ratio is that out of whack, the markets are gonna correct themselves. And as a result of that, we put on some short positions. But I'm sure Lance and Jeff are seeing the same thing. Real big short-term swings, which is why we have opportunities right now for swing trades. Is that kind of in line with what you guys are kind of seeing, maybe in different ways, different tools, but in terms of momentum?
Oh yeah.
Yeah, the momentum is so hot. I mean, you could buy shit and 10 minutes later sell more shit and make 30% on the weekly options. Like I physically can't send trade alerts because stocks are moving. Everything's moving so fast that it's like buy the open. If you get a dip, just throw money in and then close your eyes and the names are moving. Like I don't know how to describe it. Is it skill? Probably not. But, it's like
skill.
rolling the dice in Vegas.
There's skill in taking prop and being disciplined and taking money and not watching a winner turn into a loser. There's an entire skill set. There's an art in even just, letting it rip.
The crazy part is, let's say you sell, like I had Royal Caribbean Cruise the other day. I sold the weeklies, made good money, and then the next day it's up 5%, and it's just continuing to go. Like there's actually been day 2s and day 3s, and that's something, for a while we used to talk about, like, hey, you get a pop, sell it. As soon as you get the pop, now you get a pop, it's popping again, and then again, and it's like, man, I why did I get out? That's the kind of market we're in right now.
Yeah, but you can't get too cute. Like somebody posted on the comment board, Jeff, I missed one of your trades. It just started moving too fast. You can't get too cute on entries or exit. Be a market taker, not a market maker.
Yeah.
So market makers sit there with the bid-ask spread. They make a living by selling stuff to you that they don't plan on keeping, or buying something from someone else that they don't plan on keeping, just to make the spread. But those of us that are actively trading or investing, if you want something, take it. Take the ask, go across. Don't sit there. This is not a market to be timid. It's not a market to be patient. Yeah. Get your position, get your risk on, because if you get too cute, you're going to hurt yourself. And then also on the profits,
you're not going to get filled either.
You're not going to get filled. But then also, like, don't be too cute on booking money. Get that money in the house. Get that hay in the barn, as the rednecks like to say. If you made some money, it's okay to take a win and move on to another win. You don't have to be there for the whole extended move. Take half off and let the other half run. Yeah. And you'll be surprised how much it can keep going. But at least, like, psychologically, that half that you booked probably paid for your position and then some. So there's little tricks that you can do to work against human nature.
And if you take half off or take some of the position off and you got to win, then the rest you're more likely to hold and not baby it so much to where you're staring at it every tick and everything. You're more like, hey, like, for example, I bought some Fortnite calls, FTNT, and the stock had a phenomenal move, booked, I think, like 50% on most of them. Then the stock the other day had a 6-8% drop. I think it was on Snap or Google, when all the tech names crashed. Stock filled the gap in about 5 days, and then today it's up another 3.5%. Mm-hmm. Did I care when it dropped 6-8%? No, because I already booked most of my profits already, that I let the other half, or more than a little bit left, I let the other portion of the trade ride, and now they have earnings today after the close. So I'm going in there where I've already taken my money off the table. This is just a bonus. So if the stock
free rolling,
5%, yeah,
Papa's free rolling.
That's how when you trade. Let's say the options go to 0 tomorrow on earnings, or they go to like 20 cents. Well, it suck, yeah, but I'm still going to be profitable on the trade. And would I change anything? Heck no. It was a really good trade.
Look at the smile on our faces. When you're trading and you're this happy about it, you're making money. It puts you in a state of zen on seeing the market and making good decisions, because you're coming from a place of winning and winning and winning. And so your habits become better. It becomes a self-fulfilling prophecy. So it's in reverse when you're getting your ass whooped. You're like, don't want to get out of bed. You keep the light not from coming into the room. You don't want to read too much brightness. You tone down your computer so it's not too bright. You're delayed in making all decisions or actions in the market. You're just hoping things come back. So I guess what I'm trying to say is, if you're flowing like we're flowing, and you're taking the advice that Roger and Lance and myself are giving you in trades, keep it moving. Let's keep it moving. Keep it going. Don't get stuck.
One important point on that, though, is when, and I tried making note of this, especially to Blitz with Under Armour and New York Times, the failing New York Times. Yeah. When you've been running good, you don't want to get so caught up in the euphoria to where you start pushing more size. So let's say, for example, and this is all hypothetical, I can only speak for myself, not anyone else, use proper risk management, all that. Let's say you had a $10,000 account, and let's say you grew that account to $20,000. Don't be pushing so much now, because you've been running good, to where you're thinking you're the greatest thing since sliced bread, and you start over trading or over pushing, and then you get whacked down again, and that 20,000 now goes to 5,000. You're like, man, how? I was just up 10 G's. So you always want to keep that in back of your mind. You never know, when you're on top of the mountain, it feels great, but when you fall back down and then you're looking up at the mountain, that's when it gets scary. And that's when people usually blow up their accounts.
See, I take a different point of view. If you're in the zone, know that you're in the zone and keep shooting. Shooters shoot. And if you're hitting it, be active, but don't be stuck. But you're right about risk. Don't like expand your risk too much. But there's an 80-20 rule. You make 80% of your money as a trader in 20% of the time. So if you don't hit that shit as hard as you can when you're seeing it and you're hot, you're missing that opportunity for that 20% of the time to be a big change in your progress, in my opinion. Experience.
I would say that I don't personally, and this is just my opinion, I don't think you're going to get a rip in the markets like we saw over the past 2 to 4 weeks. I don't think the market's going to be that easy.
I think you're going to have a couple of them in the next 12 months. I think we're going to have collapses followed by rips, followed by collapses. So you need to just.
I think Lance means over the not in
not the short term. Yeah,
in the short term. Yeah, in the next couple of months.
Oh, for sure.
And I tend to agree. I tend to agree with Lance. I think I want to show you guys something interesting. And I talked to Jeff about this the other day, and I think this is very telling right now. If you look at the long bond, and I've been talking about this day and night. But if you look at the long bond, it's been very, very choppy. And if you look at tech right now and look at consumer stocks, they look like they're getting a little bit away past that. And I think it's too much too fast, because the bond market ultimately controls where these things go, not the other way around. So I think the tech and consumer discretionary, which is what a lot of people have been making money on the last couple of weeks, are going to come back here, because the bond market is finally, after having a couple of really, and I remember, Jeff, you were saying this is going to give the market a lot of juice, and it did. This right did. It gave the market a lot of juice. I remember you were here last week when we went right up here, and you said this is going to juice the market, and boy, it did. It juiced the market, and then it juiced the market again. And I sold at both of these 2 times. I just took profit today on these positions. But I think the bonds are going to come back into their range, and if you notice, this and this is what's exactly following the market. I think the bonds are going to push the consumer and discretionary stocks back down and give them a little bit of a wake-up call. Again, in the near term. But I do agree with you. I think over the next year, we're going to see lots of moves. But I'm very, very particular right now, because I think the bond market is what's giving the consumer stocks and the tech stocks the power to move higher right now. And I think that's going away.
It's great info, but we only have a few minutes left. So, and I want to get this final thing in really quick. Roger and Lance. Roger, you can go first. And Jeff, I'm going to save you to the end. I want to know what your favorite trade would be right now. And Jeff, I'm holding off on you because I know you just released 9 trades this morning in your Money Flow Elite service. So
we'll get there.
You're busted. Roger, go ahead.
My favorite trade right now, I would probably, if I had to choose one trade, I would probably stay short the bonds. I got out of it this morning because we took a really nice profit in 2 services overnight, like 30% or 27%. But I think I would stay short bonds. I'm pretty confident they're going to continue. The long bond is going to continue moving lower over the next couple of weeks.
Okay.
Or one more. Or I would probably, sorry, Laura, I just got to say this. Or conversely, I would probably short tech or consumer discretionary, which I actually may consider doing at these levels, because that would follow the long-term trend lower. So I just kind of gave you 2 things that I'm considering doing right now as well.
Thank you.
Yeah.
How about you, Lance?
I wish I wouldn't have sold anything over the past couple of days. I mean, I've been talking nonstop about all the breakouts, like in Shopify and Amazon and Tesla, and I mean, I will fully admit it. I got rid of a lot of these bad boys on the move, and now they're just rubbing it in my face, with Shopify up 9% and a lot of these other names up a lot. And I mean, am I mad? No. Am I happy with my, trades? Sure. But man, I left. There's a chocolate cake right in front of me, and I don't have a fork to eat it. So best idea though. I'll throw a flyer out there, and I could not get filled, and these options have moved so much. But any pullback ahead of earnings, look for Urban Outfitters. 10,000 September 21 calls. That's about $1.25 million on a weird retailer that's hey, another short squeeze candidate. So we'll leave it there, Urban Outfitters.
Awesome. Thank you. All right, Jeff, pressure's on. Talk to me.
You know, today is a very special day in Joy of the Trade land. It's the third trading day of the month, which means Christmas has come early for those of you guys that are in Money Flow Elite. Lance is cherry picking my trade. Don't call him out, Lance, this time.
Oh, no.
Like you did last time. All right. So not my number one trade, but a trade that I really like, a stock that is being chased and that has like exploded on my scanner, is Ford.
Wow.
Ford had its biggest July since the Great Recession. And so I'll show you my system. Roger, share your thing, but then I'm gonna get into this presentation.
Yeah. I just want to look at Ford because I'm interested in what you have to say. So I just want to kind of I haven't been following it, and I'm very curious what you have to say because I want to hear.
What was the best selling vehicle?
The stock broke through its 100-day moving average. It had 16 million shares traded. 16 million shares. 4 times its average. So what I look for is massive volume on the stock, not options. This is for the stock because it's a longer holding period. So I want to see institutions buying something. They're massively behind the curve on Ford. Ford had awesome earnings behind them. Yeah, not GM, Ford. They had awesome earnings behind them. And I'm going to share my screen right now, Roger, if you don't mind.
Please do.
They had awesome earnings. And here, let's see if we're here.
Best-selling car brand last month too. They just had numbers today.
I love that new Bronco, man. Everybody around here in Ponte Vedra and Nocatee, I mean, honestly, it's been just like it took over all the Jeeps. Everybody who had a Jeep now has one of those Broncos. I really like them. I haven't driven one yet, but
Are you
even
guys seeing my slides?
No.
Roger, I've been waiting 15 months now.
Oh God, that's crazy.
Still no build date.
Now we see
They have that Ford F-150. And it's
Raptor just came out.
Raptor, and it's
115 G's with a 50 grand markup. $165,000 truck.
Unbelievable. Unbelievable. So today it's like Christmas, like I told you. So I want to rush my brand new monthly trades to you. And those of you guys that saw this last month and joined this last month, we had some serious winners. So right now, you come in today, there's a whole bunch of new trades. So the system is based on predictable, repeatable monthly phenomenon. And it happens the first 2 trading days of the month. So that's how I picked up on Ford. I picked up on the volume of Ford. We had Amazon last month. I don't know if it's in this deck, but we picked up on Amazon before all the institutions chased it. And so most people wouldn't know this unless they worked on Wall Street. Every single month, a massive flood of capital pours into very specific funds. It's about $25 billion on average. And this sudden surge of new cash forces large Wall Street institutions and funds to buy stocks. So I find that Wall Street, they love to dip their little toes in the water on certain stocks at the beginning of the month. And if they like what they see, they ride them higher and higher all month long. You just need a way to get in ahead of them, just like I did in Amazon last month before the Amazon explosion at the end of the month. So just like in January, check this out. The SPY was on just like a hell streak, right? But on the first trading day of the month, I spotted a $1.9 billion money flow surge into Citi. First trading day of the month, $1.9 billion, clear as day. So most investors were steering clear because of negative headlines. Planning wrote, Citigroup failed to disclose reps tax liens and judgments, FINRA says, right? Citigroup is being fined by FINRA. The stock took a major hit, and the bad news kept rolling in. Citigroup's stock slides after capital rule triggers pause in stock buybacks. 7 days later, they issued a negative press release, and the stock price cratered even more. But the $1.9 billion flow is clear as day. So what I did is what I always do, and you get 9 of these today. I sent out a high conviction trade alert on Citi. And I give you the symbol, I give you a limit to pay up to, a target. I give you an option expiration, strike price, the limit to pay for that option, and the target that we're looking to take profits on. Anyone that took action on those trade alert made 7 times the average yearly S&P return, 7x. It's a 79% opportunity on Citi. So I got this by Michael. Doing great, Jeff. Up 60% on City last month. But the brutal market sell-off didn't end there. The markets kept tanking in February too. Down another 4.3%. Look at that. I'm sure you remember it. So most traders were throwing in the towel at that point. But all I was focused on was where the next money flow was going to hit. Like clockwork, on the second of the month, $220 million surged into ATI, Allegheny Technologies. That's a massive flow for a stock that size. So I sent out a trade alert to all the Money Flow Elite members and did the same thing. Give you a nice little write-up. That's the art on top of the science that put it on my scanner. I give you an option to play. And sure enough, ATI exploded for the rest of the month. It was 96% opportunity. This is recent history, guys. So the first 2 trading days of the month is when Wall Street tends to tip their hand on the stocks they plan to accumulate. It's when the fireworks begin. So that's what I was looking at all day yesterday. I was just like going nuts. People trying to call me and talk about all kinds of shit. I was like, I'm watching these scanners to see who these institutions are buying. So think about it. Every 2 weeks, you and I are doing something to send certain stocks soaring. It's got nothing to do with our trading ability, nothing to do with our shopping habits, nothing to do with the bills we pay. Most people don't even realize it. 41% of working Americans have their paychecks set to automatically invest in their 401ks. Every month, the money's automatically being deposited into Wall Street's hands, and it's going straight into the hands of the big institutions. So what do they do with it? This is pretty common sense. They invest the money in the markets like they should, like they have to. But they can't just throw it into the S&P. You see, money managers, and this is where working on the street helps me, they get paid hefty performance bonuses for beating the S&P. So they try to single out a few stocks each month they can to ride higher and higher. So what do these institutions do? During the first 2 trading days of the month, it's test time, where they're pumping in large amounts of capital into a stock. It's like how the stock price reacts to their massive buys. If they like how the stock prices react, then they confidently keep on buying, supporting the initial position. And this is a fulfillment all month long, sending the stock price higher and higher for the rest of the month. They can't just accumulate a position in an hour, these institutions. They have to put on size. So here it's happening in real time with Vertex, a trade alert I sent out to Money Flow Elite members. Look at this on the 1st of December, this massive volume candle, so much larger than the other ones and the average ones, 5 times it. And then a big price move in the stock, almost 4 times the average volume on the first day of the month. They do this to gauge how sensitive the stock is to large purchase. If everything checks out and then they keep spending, they spend the rest of the month accumulating the stock. Accumulation results in the stock price going higher for the rest of the month. And that was a 19.11% gain on the call options for the months. Watch it happen again and again. ATI, second day of the month, $215 million money flow, right? ATI call options were 96.8% in 1 month, And then Schlumberger, first day of the month, $610 million flowed into the stock, came up on my radar, and boom, the call options were 200% in 1 month by just tracking what these guys are starting to do and most likely going to continue to do the rest of the month. So here's how I track it. I got a Bloomberg that costs us about 25 grand a year to maintain.
It does. It does.
And I'll say this, I say the same thing to you every time you make that comment, Roger. Find the geek on the street that can provide the same value for $25,000 a year.
It's your thing, man. You've been using it for years. That's like that's your thing. You're comfortable with it.
It's value. Like find a kid that could do that kind of research. The terminal has a proprietary built-in algo that looks at every stock in the market, scanning for the exact monthly money flow setup I just showed you, both long and short. Look at this behind the curtain screenshot with a real example of my best trade last year in Coterra. Check this out. My Bloomberg scanner marked it as the #1 for the month. Boom. That was a massive $270 million money flow into the stock on the 2nd of September. So very important that these things happen right at the beginning of the month, right? Second day of the month, $270 million right into this stock, which is a big move for that, a big flow for that stock. Those that took this trade alert on this one, they crushed it. It wasn't 100%. It was not 200%. It was not even 300%. This was a monster 423% gain on CTRA. We're big game hunting in Money Flow Elite, okay? Now, this was the best trade that I issued out last year. But hopefully, it's clear to you at this point that just throwing your money into the S&P or trading ridiculously complex trading strategies is not the best way to reach your goal. So it's important. Your timing right now couldn't be any better. We've had some of our best months since the S&P crashed from its peak. in January, which was down 24%. How? I got a built-in hedge. At the beginning of every single month, I issue out 6 standard money flow trade alerts, just like the ones I showed you today. But because of the extreme volatility in the markets, I hedge those 6 trades with 3 strategic shorts. This month might have an extra short. We look at the exact setup I just showed you, except we play the inverse to the short side. I call it a money flow cluster. Here's what it looked like in January. Look at this cluster over here. And so we've got some calls, we've got some puts to round it out. Total rotation on 5K, $3,800, 77% gain on the capital in 1 month. As the markets crashed, the hedge position saw 352%. We got printed on our put. That's why it's hedged. That's why it's complete portfolio strategy. Watch it happen again in February. Look at this. Nice overall 80.2% gain on both the money flow trades and hedged positions. So the total position, the total portfolio, 80%. March, 27.6%. 2 massive wins on the hedges for 156%, 285%, not just saving the portfolio, but delivered 27% gain in a month, okay? So I can't promise you that every month we're gonna see this type of massive success. But here's why it's critical you take action today. From what I've seen, being hedged, by hedged, I'm not saying go out and buy Raytheon. Hedged with puts, with shorts, is the only way to play this market right now. Over the past few months, I've seen many traders blow up their accounts trying to swing trade on shorter frames. The number one mistake they made was not using a hedge strategy. Please don't be one of these traders. Instead, harness the market vol, gain edge in your trading by tracking institutional money flow. Trade with the big boys. Look at some of my top winners over the last 3 months. 76%, and this is recent history, though. This is recent history. 76%. Pretty. Sorry?
Those look great.
Pretty.
Yeah, it looks beautiful, man.
Yeah,
Jeff, did you know that your
last month? Go ahead.
Your average winner was 136%. That's your average winner, man.
In 28 days.
Yeah, I know. I'm very excited.
That's incredible.
Thank you for pointing that out. So 76% on Lennar, 88% on Airbnb, and 195%. That was last month. That was in July. So I'm not talking to you about like when Martha Wilson was like, chipping away at George's wooden teeth. This is real life here. So today is your chance to get in on 9 brand new money flow trades that just triggered on my Bloomberg scanner. That just came out inside my premium trading service called Money Flow Elite. You can expect 9 trades on average per month. You get the entry, the exit, the stock, the options, everything that I believe that you need to succeed, starting with your first trade alerts today. It's like Christmas in there. I'm also going to kickstart Money Flow Elite experience with how to trade global money flows with options. So those of you that don't know how to trade options, we have a tutorial in there that shows you how to maximize the gains, how to limit your risks with bearish positions by buying puts, and it's there to help you hit the ground running. I'm going to send you these review videos that I do every week, talking about our trades, talking about the charts, updates in the market. It's like an unfair advantage. You're going to have all the market insight on what I see coming next, and it keeps the combo open between us. You're going to have a 24/7 elite members portal, which is super slick. Our team is amazing that built this thing. Super easy to use. You can use it 24/7. You have the elite course, the alerts, the videos, everything on this awesome portal for you, all as soon as you join. You're going to have training calls, which are really fun. Every month, we get together live. You can ask me about if you liked Lance's haircut longer or short. I'll give you an opinion on that. You can ask me on humidity, if it's better to have dry heat or humidity, how to cure your slice, how to properly grill a steak, why your other trading system sucks, why our work position is getting killed. I don't run away from losers. I face the music. I own my losses, and we'll talk about whatever you want. I love it. I think it's a really awesome time, and I think my people love it too. So this is going to be 100% live every month. We'll have a special bonus, reverse monthly money flows, the ultimate guide. So I show you how to play the short side through puts, and just take a look at yourself and take a look for yourself to see what the top students that I've had with the strategy have said. Bucky said he started his subscription during Jan, and in that month alone paid for the entire subscription and a lot more. Great things about Jeff Scan that is recent big boy flow. That's right. We're trading with the big boys, not chasing crowded monthly long trades. I made 44% in January with your Money Flow Elite systems. Correct. Very satisfied, said Ruben. These are some of the best stories I've heard from my students who have followed my various strategies in the past. I love it when I hear those kind of stories. I know Roger and Lance love that stuff too. That's why we're here.
I do.
We're here for that.
I love
we're here
it.
for that. We're
Look
here to
at them
help y'all.
Tupperware calls. Woo!
Those Tupperware calls printed, the Amazon, like I'm excited about the new trades because this month is insane. And I think there's going to be puts that print too, believe it or not, in this month. And I think there's going to be calls that keep going. And so all those people have one thing in common. When they saw an opportunity, they took action. They hit it. They were market takers, not market makers. They did not sit passively. They took action into their own hands. So remember, brand new trade alerts were just posted today. There was 9 of them. You get your first 9 right now. They're already there. Normally it's $19.97 to join for an entire year, but I had my team do something really special for those of you that are here right now. I convinced them to slash it so low. And when they first told me about this price, I wanted it to go low. I actually had heart palpitations. I was like, how can I continue to play my Pro V1s that are $40, $50 a case? Because you're right here right now. You're not going to see a $1,997 price point. You're not going to see $497. Are you ready? You're going to get 9 trades waiting for you at a special bundle price for $97.
Wait a minute. Hold on a second. Wait a minute. You mean $970?
Bro, it's $97 today.
You're going to sell all this for $97?
Yeah, money flow. Elite.
How am I going to pay for that Bloomberg terminal with that $97? This is like a deal of a century. $97 for this?
You know why inflation is only 9.1%, Roger? It's because of this. It's because if they didn't put our package into the cluster, then it would probably be like 15, 16%. We're saving Joe Biden's administration.
folks, seriously, at $97, 9 new trades a month, Jeff's feedback, and having a session.
Bro, $10 a trade. $10 a trade to get in with the big boys. My scanner has a pretty high, like a really high percentage of finding good flows. And guess what? 30 days from now, if you hate it, no sweat. Give us a call. We'll give you every penny back. I know times are tough out there. I know they're telling you on TV that they're not tough, but I know they're tough. And so I'm doing everything I can do to help. And if you don't like it after 30 days, you could ride we had people that were like, I'm like, I don't know how you could hit some of these stocks. And
I don't know either, especially, you get Terry said 300% on Tupperware calls.
Yeah.
I mean, the stock was up, what, almost 50% today?
Yeah. I'm telling you. So like these, but if you don't like it, we're not going to haggle you. You get your money back.
And if you have a small account, it's great because you just saved yourself about $800 and something. So you have about $800 something more to trade with if you have a small account.
Super low to join today. We don't do this very often. There's a
cap.
No. That's what I was going to say.
You threw me off. You threw me completely off guard, Jeff. I honestly thought it was $970.
Yeah, we only run these promotions for people that sit through these presentations live with us. There's reasons for that, but the deal's for right now. You got to hit it now. It's right now. Yep. These trades are hot. I don't want you to be there next week when it's too late. Listening to me, Lance is going to be. Lance loves bragging about those home runs he's hit.
Oh, I do.
And he's going to be like, "Oh, Jeff, I've jumped in on that Ford, or I jumped in on this, or I jumped in on that." And you're gonna be like, "Dang, I was so cheap, $97." Like
$97.
That's Folks, like half your cable bill.
I mean, a third. No, Jeff, a third of my cable bill.
It's a third, exactly.
A third of my cable bill, exactly right. A third. Now, folks, this is premium trades. These are the kind of trades that Wealth Press will sell for $19.97 without blinking twice, without even blinking once. So
take
seriously
action now, because these things are moving already. These bad boys are moving. So it's $97. The special bundle price. Go on wealthpress.com/flows. Please put that in the chat, team. Or you can, if you want to talk to somebody and they can explain stuff to you, 877-212-2649. Get in there though. Let's go.
Folks, seriously, this is, I really in good faith thought that this was going to be a $970 I'm like, what's going on here? 9 trades a month, every single month, and you're using technicals, you're using fundamentals, you're using time of year, cyclical natures.
And I diversify the portfolio, with different sectors and stuff, so we don't have I've been in this for a long time. I know.
Now, Jeff, is this per month 97 or is this?
Yeah, it's 97, but we didn't normally offer it monthly at all. You had to plunk down that whole year, and it was for almost $2,000.
Yeah, so
folks,
we're
price.
literally
You get to try it monthly. Yeah, it's awesome.
And Ford is up 20%.
Well, if you've already been on it from before this morning, you got in this morning, you had a chance to get in.
Jeff, I'm going into the members area now. You know me.
I know you are. I know you are. You like money. That's because you like money. I know
that is true. That is very true.
Lance doesn't mess around.
I got no comeback for that.
I like money too. That's our big thing in common. That's our big thing in common. It's definitely not fair.
Take advantage, folks. Take advantage. Jeff is red hot. It's a great service. It gives you an opportunity to dip your toe into a
Petros is asking me who doesn't like money. Losers don't like money. There's people that try to lose. Like there's people that have like a disposition to losing and try to do the wrong shit all the time. I've met them in my life. They're natural born losers.
Jeff, let me tell you an interesting story. If you ever read the last couple of interviews in the original Market Wizards book, they interview a couple of shrinks. Yeah. And in there, they actually talk about a lot of people who think they want to trade and talk about loving markets and loving money actually do not. It's actually a really interesting phenomena.
I know it. And everybody gets what they're looking for out of the market. Some people like pain. And so the market will deliver pain to you. I like money. So does Lance. So we're going to try to, and so does Roger for that matter. We all like money and we like making it in the market, and we're not there to get our what's kicked in. So yeah, it's an awesome system. It's super simple for people that don't like to hang out in front of computer screens all day long, because you just get these trades on the third trading day of the month. You can add them at the end of the month, and then we do it again. We rinse and repeat.
Or you can be like someone and buy the weeklies or the front month.
Yeah.
That's it. It's $97 for a month. But there's also a special offer. If somebody tests it out for the month, they like it for $97, they want it for a year, there's actually going to be an offer that they're given to upgrade for annually for $400 off.
Wow.
So this is incredible. A great time to test.
So then it's even, and you can only get that offer if you buy the monthly today.
Exactly.
So for everybody who's wanted to dip their toe into Jeff's world, this is your chance to do that. Get into his orbit right now. He's red hot. He's got a great energy.
Nine trades, Jurgen. Sorry. Jurgen's asking how many trades.
He just got back from his annual vacation, so he's nice and mellow now till next summer.
Yeah, you see how relaxed I look?
You do. You actually do look very relaxed.
Well, yeah, it's a self-fulfilling prophecy. You think relaxed, you do well, you live life healthy, happy, you make money, and rinse and repeat. Or you could do it another way. There's other ways to do it. You could. This
is the healthy way to do it. Folks, get in on it now.
Prosperity.
Go to WealthPress. Yeah, go to wealthpress.com/flows or follow the link that I believe that somebody's going to put in the chat right now. Somebody should definitely be putting a link in the chat, and here I'll put the link.
Thank you.
Oh, there it is. There's Francisco. Thank you for doing that.
There's the link.
Thank you for doing that, folks.
Fun. I thank you guys all for listening to my spiel, and let's go.
And guys, too, if you need any help or want to order through the telephone, you can always call that number, the 877-212-2649. We have fantastic staff who will take care of you guys and girls as best as they can.
Carlos, there's no time commitment, just monthly. That's what I love about this. You get to try out Jeff. You get to see what he offers you. You get to go into his orbit, and you'll get to avoid the asteroids.
Doreen just wrote, I have this program, and it is great. Thank you, Doreen.
Let me go ahead and repost that. Let me repost that. That is wonderful. I love getting feedback like this. This is why we do what we do. We really love doing this, and this is great.
Mitch is telling me LFG. Yeah, Mitch, let's LFG. Let's go. I wish I could say it, but I'm trying to be like PG Jeff. I've been,
he's a choir boy.
I've been turning a new.
Thanks, guys, for joining us. I wish everyone a wonderful, wonderful week. Take advantage of this offer. Don't snooze. Brandon, we got your email. Somebody will contact you. If they don't contact you, don't snooze.
I can promise you one thing: these are action trades. There's action in these names.
Well, dude, you're trading Tupperware call options. If you don't like that, what do you like in life?
I can promise Ford is got an explosive thing happening, but from a company standpoint, it is the most boring, plain vanilla name in there. There is action in that list this month. Let's go. Get in there.
All right, guys, let's wrap it up. It was a good one. Thank you so much for joining us. Jeff, Lance, Roger, $97 to check out his service for 1 month, then a special offer at the end of that for a year. Thanks, everybody.
Thanks, everyone. And Laura, tink you for hosting. We really appreciate it.
Laura.
Yeah, everyone in the chat. Thanks, Laura. If you're watching on YouTube, leave a comment, hit the like button, all that stuff. It helps.
See, we're much more civilized with with that female energy.
So,
Otherwise, it's
100%.
like cavemen in the locker room, this guerrilla atmosphere.
I
This is
agree
much
with
more
you.
adult and personable. Thank you.
Thank you.
Thank you, Laura.
Bye, guys. Cheers, everyone. Take care. Bye, everyone.
Bye. All.
Take care, Jeff. Bye, Lance. Bye, Laura.